We made it, folks. We made it to Friday. Everyone likes a Friday, right? Markets are closed for a couple days. Let's see what that jobs number is. We had some decent earnings, at least Broadcom. Our chips. Can Broadcom lead us back? We'll cover a lot of earnings today for late in the earnings season. We'll cover that. Of course, we got the jobs number at 8:30. We'll see if that can have an impact on the market. Our guest is coming on a little bit later, 8:45. We got a new guest for you today. That's Erin Keating. She took over for Michelle Krebs over at Cox Automotive, and we'll talk about the tariffs. Folks, it's Friday. Let's get a smile on that face and start pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Let's get things started here. We're in the green by 5 handles, 57.41 the quarter. We were 20 handles higher, not that much lower, finding a little support at the close. The buck is just getting kicked around again today. 1, 2, 3, 4, fifth down day in a row, down 26 cents, 103.77. TLT perking up after a 2-day losing streak. 3-day losing streak of 58 cents and 90.98. We have the USO rebounding off that 70 level, up 75 cents, 71.88. GLD in the green, almost $1 to 69.18. SLV flat 29.66. Bitcoin just hovering over 89,000, just down a couple $100. That's nothing for Bitcoin. I'm going to remove my charts and I'm going to bring on Christian Fromhertz. No Triple D today, folks. Triple D is off taking Spencer to a hockey tournament. So let's give a big shout out to Spencer. Let's hope he, puts on some Gretzky-like moves and they pull out a victory. But let's get to the markets, and now we'll bring in, you know what? I'm going to call you CCC from Hertz.
Oh boy, we're throwing another C in there? What's going on?
Calm, cool, and collected.
Well, we'll see. We've got a very interesting jobs report today, and the market is applying a very big move. So buckle up, Joel, because I think the S&P is implying a 1.6% move for today. So yeah, it should be quiet. It should be a quiet Friday to end the week. And I was just looking to see what, just for the hell of it, what's IWM small caps implying for today. 2.1%, a 2.1% move for today. You're kidding me. Those are some big moves. I saw also one of the headlines being quoted is that's a bigger move that is being implied today for the S&P than it was for the election night. So people are kind of like they're a little worried about this jobs report and which way it could go. Coupled, Joel, you got somebody speaking at 12:30 too. What did you used to call? What's the nickname for that guy that you used?
Pump and Powell. But I don't know. I don't know about that. Boy, oh boy, yeah. So you know what that means? That they're implying a 1.2% move. You know what that may mean?
1.6.
1.6. Maybe that just means those option guys are just pumping things up, and it's going to be a nothing muffin. And the reason I say that is, and this data lags. Who knows what the lag factor is going to be? Who knows what the revisions are? But we've had a lot of layoffs. I don't think the government job stuff has come through yet. I don't know if the recent layoffs have come through yet. So I just don't know. Maybe it's not this month, but maybe next month that you get the, oh my gosh, we're going to 5.5%, 6%. That would give two-edged sword. Oh, well, rates are going to go lower, or we're going into a recession.
Yeah, that's a big question, is whether that has trickled into this report. I would assume not yet. I mean, I don't know when they take the snapshot for this, but I would say, maybe you get a little bit of some of that. And also we have been hearing about some companies too that are saying that they're going to cut jobs, but I don't think that hits this report yet either. So we'll see. They're expecting. I'll just give you a quick preview, and we'll preview this when we get closer to the 8:30 number. But yeah, they are looking for change in non-farm payrolls of 160. Remember that the prior month was 143.
Mm-hmm.
The change in private payrolls that they're looking for is 145, and last month the prior was 111. And then the big thing last month was the odd thing that I thought was the average hourly earnings month over month. Last month was an increase of 0.5. And remember, that's when like we started to talk about, really like inflation, with the with what is going on with jobs earnings. This month they're looking for 0.3, so which is still a pretty hot number. So yeah, so that's what we've got for estimates.
Okay, we definitely have some earnings to cover here, but before we do that, I just want to go get a little technical with you. I mean, with this volatility, as of late, you got, I'm the numbers kind of guy who's like, show me the money, like show me a level, show me something that's going to hold. And I think we've come up, did some digging with my buddy Randy yesterday and looking at stuff, trying to, you know, get a perspective on things. And I think that low from yesterday, it's just huge. I'm looking at it, you can't say, well, 57.20 exactly. But the only reason that I say that is looking at my chart here, and I'll make this a little bigger. And I don't know if you have anything that lines up with it, but when I'm looking at things, I like to see more than one low or one high in an area. That means that's a signal of, a little bit more of accumulation. But yet you had four lows in this area back in September. That's a ways ago. And you've had four pokes at it here. Yep, 1, 2, 3, 4. Today's the fifth poke. If we hold, we hold. There's a chance for a rally. It's not like I'm going out and buying $8 trillion worth of stocks, but I think you got to look at that level. And if we don't hold that, I just don't like the way the dailies look. Do you have a go to number here or not yet?
I do have a go-to number for you, and S&P futures 57.2150. Yeah, so you could see right here. That's the level. This is so again, like the way that we're calculating this is the value area for last year. It's based on all of last year's activity and roughly one standard deviation of all of the activity. That's the volume and the price. So you could see this too if I bring up the weekly chart too. It's a little bit cleaner. But there we are. We're S&P futures are sitting right there. So it's going to be a make or break type day.
Okay. All right. I added your screen there, but it didn't for some reason. We'll have to figure this out.
I'll bring it up right.
You added it. I see it, but I don't know.
How about
I
that,
think
guys? Can you see that?
No, I think it's something with our configuration here. I will have to let me see. Should I play around? Nah, not mid
Yeah,
show.
try
Yeah,
it.
what
I
the
think it
hell?
was like with the something with the
What about now, folks? If not, no, I don't know, Christian. I'll have to figure this out. Okay,
oh,
we'll go.
okay.
You guys can see my chart. You'll have to deal with my. Oh, now Richard says yup. So, all right, adding confusion here. All right, let's. We have to cover some earnings, right? And whoa, the spoos took off. I watched it. I'm like, whoa, what's going on? And it was the Broadcom report. So let's go to the Broadcom report. We'll tell the folks, y'all know what it is, $1.60 versus $1.49. Sales, just a slight beat on the sales too. Q2 revenue, financial results are strong. Guidance doesn't, well, it doesn't give, it's not down 50 points. So I'll say the guidance was okay. Christian, give us your take on the Broadcom. We'll do a few technicals and we'll move on to our next stock.
Yeah, and while I'm commentating on Broadcom, try again because I don't think folks can see your screen, so I don't know what's up with that configuration. But hey,
I bet you they can now.
this was a good report by this was a good report by Broadcom. So it's just a question of is it going to hold? And we're seeing this with a lot of reports where they can't hold the gain. So I think the report was great. They said that They executed well. They said positive things on it. I'm watching a level like right around, keep it simple, level 200 is what I'm watching. But I thought this was also, it just, when a name reports or sells off into the report, when I know Dennis talks a lot about this, when you've
Love
got
it.
a couple names that are reporting in the same industry and one really gets hammered, it's setting an easier bar for Broadcom to, in this sense, to report. It's a little bit of an easier situation because the sentiment is so down after that Marvell report. So basically 200, which gets you almost back to where it started for the week.
You know what's really interesting here, and you look at stocks, you don't look at them like all the time, but probably when this blasted off, I probably said to myself, well, maybe if it comes down and fills this gap, it might not be bad to take a poke at it. The top of the gap was 182. You filled that gap very generously yesterday, going to 177.61. So if you had the gumption to take it to the report, you did get a gap fill. Pre-market high 214. So that takes you all the way back up here. I don't have anything for you. I'll just say if in fact you can get back over 200, which is not too far. 201.19, that was an intermediate high, but believe it or not, your 4-day high is 204. I'm not sure what the optionality is going to be at 200. I'm sure a lot of people, oh, I'm afraid to take it to the port. I'm going to buy the 200 calls, or I'm short, or I want to be short 200 puts. So could be a tug of war of pinging at the $200 level in Broadcom. Let's move on. Our next earnings report, and let's go. Let's go to a loser. Let's go winner.
Before we go to the next one, I would say also keep an eye on what Nvidia does today. Nvidia was down another 5.7% yesterday. Again, I still think it has an impact for the overall market.
Mm.
This Broadcom report is not even lifting the stock up that much. It's up about a little bit less than 1%. So again, like these are not, even though there's good news on the tape, it's not really pulling up the market as much as you would see in a situation where the volatility wasn't as high as it currently
You got a
is.
great level. This is a level the market is giving you. Parallels 110.11, 110.22. Lows of the last two sessions. If you want to lose $1.50, you go long at 111.50. I mean, you got to give it some more room than that. Another possible trading scenario in this, your hands off. It's a bad number. It's a bad open. They slice through. They blow away 110. They came back up through it. So there's a good level for you in Nvidia. If it gets rocking and rolling to the upside, 115.13. That's way above from yesterday's high. Someone else made the point in the chat is that the longer you hang out, near a level, the worse it is. And that's when we came down because we had two lows in the S&Ps, one at 57.44 and the other at 57.50. And it came down there again, and it didn't come out with gusto. Like, oh, whack, smack you if you're short 20 handles. I'm like, rut row, we're not, that's not going to be an exact triple bottom. So it went down another 24 handles. But that was a great point in the chat that the longer you hang out at a level, either support or resistance, not always a good sign. HPE down 18%, trading down 326 at 1471. What do they do? Well, they were in line and they beat on sales, but I don't even have to. They must have given some bad guidance here, Christian. Straight down. Are you looking? Wow, this is even off the bottom of the page here. Is this a pass for you, Christian?
I think so. And again, down 18%. You have these names that are, when they report something bad, they're getting woodshedded. This is bad. They also announced, as we were talking about the jobs report that we're going to get very soon, they also announced job cuts too. So they're announcing a lot of bad news. They plan to cut 3,000 jobs. They sink on weak margins.
Okay, so you did in the free market, you got down to 1409, and then boy, was there someone, was that you at like 4:30, 5 o'clock, just being really patient, like bringing everything in around 1420, 1430, just waiting for people to offer there, and then you
Yeah,
snap it up? Was that
that's what
you?
I wanted to do this morning is buy HPE stock. That was my mission this morning when I woke up.
you even you even got up early to do it.
Yeah,
Um,
exactly.
Yeah, so there's definitely some institutional interest there in the lower 14 handle. We're trading at 1475. Uh, three monthly lows at the 1450, 1460 area. Maybe it's the right thing to do is whoop up on this thing down 320 and hope for 12 bucks, but I don't know. There's a look. They're not liking the numbers in HPE. We're not holding the gains. We got nervous Nellies going into the report. S&Ps just slip into the red here, now making new lows of the pre-market session. Another stock that reported, and we're going looking at the downside again here in this one. Costco traded down nearly $20 at 1006.88, and we're going to cover Costco. And then Christian, you brought up a good theme, and I want to bring that in there. Costco did miss 402 versus 410. Sales, slight beat on sales, a mixed report. This is not a tape where you want to have a mixed report. Also, with the stock trading at a high valuation, 1020, this had been holding up. That was support. I'll have to call that resistance from now, and I hate to say it, but I just look maybe get a shot at the 50-day here, 988.42. Christian, Costco wholesale.
Yeah, and a couple comments for that pretty interesting, which I always find like the CEO commentary interesting that if you could get that from the conference call. So Ron, I'm not sure how to pronounce his last name, Vakris, stated that the company is working to minimize price increases due to tariffs, which are affecting a third of their U.S. sales, and that consumers are being choiceful about their purchases. So starting to see that theme kind of come into some of these retailers. Some of them are saying that, some are not. But he is saying, said retailers are also taking a cautious outlook, citing concerns over tariffs, inflation, employment, which has led to a decline in U.S. consumer confidence. That was some other commentary too from a note that I'm reading. But yes, choiceful is what the CEO of Costco is saying. Now, this was interesting too because it's another company very similar to Costco reported yesterday, and that was BJ Wholesalers, which had a huge day. I don't know, why everybody wanted to
Hmm.
buy BJ Wholesalers, but that's a breakout for that company. And so what I kind of point to with this, perhaps, is maybe the valuation. The PE is about a 60 in Costco. We know that Costco's always been expensive, and that's been the argument for years. But BJ Wholesaler, the PE is like a 27.
Hmm.
So, maybe a little bit of rotation into that stock and out of I was gonna say Tesla, out of Costco because of the valuation. What
Good
do you
point.
think there, Joel?
I was just going to ask you that, and yeah, that's an excellent point. BJ pulling back a little bit, new all-time high yesterday. You can't say that about a lot of stocks here. But Christian, I just before we go into, we do have some other earnings report. You brought up something interesting on the pre-market show. And and we've talked about this with Dennis, is that it it not yet, like we haven't seen the capitulation. We still see some stocks holding up. Costco was one of them. There's the chink in the armor on that one. But you brought up a couple of other stocks that kind of just been holding up well, but not until yesterday. You want to cover those stocks?
Yeah, the one that you got on your screen there is Netflix. Netflix was down. Let's see if I could get the percentage for it, just to put these things in perspective here. But I think Netflix was down like 5 or 6%. Let me try again. I just messed that up. Excuse me, it was down 8.5% yesterday. And when you think about Netflix, you can't really tariff Netflix. It's a streaming company.
Hmm.
Spotify was also down pretty decently. Spotify was down close to that 7.4%. Another company that you can't really tariff. So some of these stocks have been hiding places where investors have been able to kind of hide out. They have been a little bit more resilient because of the all the tariff headlines that we're getting. But in the course of a pullback correction, whatever you want to call it, usually the places that folks hide out in, the hiding places, are the ones that get hit. I don't know if I'm not sure that I want to say last, but they eventually go down too. And that's, if you think that you can try to like outsmart a correction, usually what happens is these names will eventually get taken out to the woodshed. So that's what I think kind of happened yesterday. Do I think we're further along in this pullback than closer to the end? Perhaps. I think we're getting there, and I think today's could be pivotal with what we get here in about 10 minutes. But I think these things are like, it's about like checking the boxes whenever we get a market correction or a major dip, and to see Netflix go down this much tells me like, wow, they're taking everything out at this point.
Yeah, and then Spotify, same thing. Bad day. That came down to its 50-day moving average. Getting a little bit of a bounce today. I'm not going to try and pick a bottom in either of these stocks either. Netflix, I would say, hey, if you're going with Christian's mantra, you do get a gap fill. Maybe you want to be patient. That gap fills down at 873.45. What I've noticed, over the years trading these stocks, when they fill the gap, they don't fill them like you want. Like, okay, if it went straight down to 873 today and the market was just falling out of bed, like there was no bottom out there, I would buy it. But it's gonna zig, it's gonna zag, it's gonna chop, it's gonna hold the psychological 900. That's just the way these moves are, where they're filling gap. If y'all have any other stocks that you feel kind of fit this capitulatory mood here, throw them in here. We got about 6 minutes, and then we'll go into a little bit more detail previewing the jobs number. It looks like I'll be going solo, but cancel all my orders on this one. Now it looks like I'll be going solo. Christian's going to
There's
be banging on the keyboard here. Let's go to a good report, right? This is a happy report. Fall into the gap. I guess not all retail stores are good. Bad day yesterday. Gap pops here after their report. Big beat. 54 versus 37. Beat on sales 4.10 versus 4.07. Net sales growth of 1 to 2%. I don't know what that means. Fall into the gap. We got over 23 bucks here, Christian. I think we're right back up here. A lot of people getting their money back in this one, Christian.
Yeah, and there's again commentary from Richard Dixon saying that we ended the year delivering another successful quarter, exceeding financial expectations and gaining market share for the 8th consecutive quarter. However, that seems to be a bit in the past. So I think it might be a little bit vulnerable. What do you think, Joel, in terms of to see if these gains hold?
Ah, boy. I mean, man, the stocks that have opened lower with bad earnings have got pounded. A lot of the stocks, I mean, we've had a few exceptions where they've opened, they gapped up. Okta, I haven't looked at that. We always like to look at things a few days after. Okta had a good day after, but then put in a double top here. I just think this is probably above the expected move here. Look at that. I just put in GPS. I would just like, if I was holding this stock and I'm like, oh my gosh, it just went to 1854 and now it's back up in the 23 handle. I looked at 23 even to 23.50. Look at all those highs there before you broke down, as evidenced by the pre-market action. You go to 23.33. Not buying it, not shorting it, but if I had a boatload of gap and it started trading 23 to 23.50, I've had the institutional desk putting some offers out there, but that's a perspective. S&P's dancing around unchanged. Do you want to go to the disaster of the day right now?
There's another disaster? Which one? What have we got? Oh,
Yeah.
go for it.
What happens when you do a sideways landing on the moon and then you can't find the spaceship or whatever landed? That's what happened to Lunar here. Holy mackerel. I don't know what to say about this one. Huge move to the. I guess if they find it, they still haven't found it, right, Christian? Is that the? Is that what they're
I
saying?
believe so. I heard that they're communicating with it, but they don't know where it is, and it's like, and it may be on its side.
Okay.
So
670, if I had to give you a level, which I am, back in October, it bottomed at 670. In the pre-market, it's just been hitting 671, 672, 680. I'll make that a strong two-star level. I just think the only reason, you could be short down here or you could be trying to cover your short. If they say, oh, well, it landed on its side, it's fine, then you might get a little pop up, a pop out of it. But that's about it. I mean, that's all I can say here for Lunar. What else? Okay. Do you want to go? Dennis isn't here. But let's do two stocks here. Well, we'll do one. We'll do the Tesla right now, and then we'll do the Palantir after the jobs number.
okay.
So all right, go ahead. Lead us on the Tesla.
Oh, so Tesla, yeah, I mean, it's getting some positive analyst commentary. Is it Dan Ives this morning? Came
Yesterday.
out.
Yesterday,
Oh,
yeah.
was that yesterday? Okay, gotcha. But it was after the close, I believe, right?
Yes.
Okay.
Yes.
So the biggest Tesla bull on Wall Street says the sell-off over Musk politics is overdone. Comes out, gets an upgrade. Says gut check moment is here for Tesla enthusiasts. Says is here for Tesla enthusiasts. Says Wedbush. And you kind of, so you get some positive commentary. And what is the stock doing this morning?
It's going down.
Uh, so I think like this is just not just this particular stock, but it's just kind of showing the market sentiment right now. Stocks are having a tough time going up on positive news right now, and we're going to go over a couple other stocks too once the jobs number is out, which is in 3 minutes. But I think that you just have to kind of be patient with this market, considering what's going on, and maybe this is a good level for. Which I think as well is at an interesting level too, but you got to have a long time horizon, in my opinion.
Okay, let me do a quick look at the technicals here in Tesla. I mean, going down on good news is just not a great factor, right? Talked a long time, we might as well talk gaps here. And if you've been waiting for this gap fill at 255.28, well, in the pre-market, someone said, no, 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 257.50 is good enough. I don't care about that gap. So I'll look for that gap fill. That was a small range day on that day. You had to close at 51.44. Low on that day, 246.21. So the other thing I would just be a little cautious on is sometimes, when he's on, he does more than one circuit. So I don't know if I don't know, don't have time to watch CNBC this morning, but he may come on and do it again. Okay, Christian, let's talk about the jobs number. I mean, everyone's sitting on pins and needles here. Give us I know you did a preview again. Can we go over that one more time?
Yeah, sure. So change in non-farm payrolls, they're expecting 160. Last month's number was, if you remember, was 143. So they're looking for actually like a little bit of a better number than last month. They're also looking for the private payrolls. The estimate is 145. And last month was 111. So 160 and 145 are the numbers that we're going to be paying attention to. Also, I would be paying attention to a little bit of what the average hourly earnings number is expected month over month. They're looking for plus 0.3. Why is that important? Because it's another gauge of inflation, if wages are going up or if they're going down. So 160, 145. We got less than a minute. And again, the implied move for today for the S&P is 1.65%. The implied move for IWM small caps is 2.1%. So the market is implying a pretty big number. The good news, if the number comes in better than expected, the market should fly. they're looking for the good news should be good news at this point because of the recession fears that are taking precedence over inflation fears, and bad
Okay,
news will be
Christian.
yep.
Christian, if
Yep.
you want to hop off here, I don't know if I've done numbers solo before, but we'll give it a shot here. The algo jumpers, boy, we're quiet here so far. Couple upticks. Jobs report, 45 seconds. Countdown. Light.
One,
No, they like it.
151 for non-farm payrolls, 140 for private payrolls.
Well, they like it so far. Nice blast up. What this market was looking for. We just blasted the 57.86. We're 16 handles off the high. 57.89.50. Let me check my sheet here. Didn't quite get to Tuesday's close. That's a parameter to look at on the upside. So you got the early pop. And it is starting to fade just a little bit, but right now, the most important thing is we have put some distance between the lows, the close, the low of the day, low of the day. Did they take it down there first? Yeah, they did, Christian. They took it down to 57.35. I didn't even catch that eye. This was just a 1 minute bar, folks. And a 1 minute bar, it went from 57.35 to 57.86. So a 50.1 minute bar. Not bad. Not bad there, Christian. I'm just going to keep going. And then when you want to hop in, you just, with any extra commentary.
Just another data point. U.S. federal government payrolls fall $10,000, 10,000 jobs. So we were wondering if that's going to come into play. It appears not yet.
Okay. All right, folks, there we go. Rally. The rally is on here. I'm going to get rid of this chart here. I'm going to go a little time frame. That 1 minute gets me nervous here. Little question here. I mean, the data. This is what I think, and I hope I reiterated it at the top of the show, was that like of all these government numbers, sunk in yet? I mean, is it next month that the hammer's going to fall? I mean, but right now we just take the data that we have, we look at it, and there it is. Still climbing, still holding the gains here. Up 31 and a half handles. Let's Christian, are you back or are you?
I'm back. Yeah, I'm back. Yep.
Okay. So what's next? Well, in honor of Dennis not being here, we're going to go to the lie detector test, right? The TLT, Christian.
Yes.
Let's talk TLT here.
TLT. So we've got a let's see. I think bond futures right now are unched. So TLT is basically very close to unchanged right now. I see the 30-year bond futures not changing too much. The dollar also is something that I really pay attention to when we have economic data. That's still down on the session too. So seeing a little bit of fade in equity futures off of that.
Okay. I got the TLT up 25 cents. Both you and Jim mentioned yesterday, Jim Tassoni, who was our guest yesterday, mentioned under $90 here. And actually, Christian, you said 89. Was it you that said 89.75 or was it Jim? Because we got to 89.73 yesterday. And that was a low, getting a little pop. So look at technically here. Maybe get a little retracement. Rally, not really holding here, Christian. We're already 22 handles off that pre-market high of 57.86.50. So profit
Fade.
takers, yeah. Profit take. But this doesn't. I mean, we're still not part of the expected move yet, right? We're nowhere near any part of the expected move. You said 1.6%.
Yes. Yeah, we're nowhere near. Yeah, one point. Yeah, I mean, for the market reaction that we're getting, perhaps because it's very close to what the estimates were. That's why we're not seeing too much of a move. And I think like Goldman Sachs put out some commentary this morning where they were thinking that if the number was 100 to 150,000, then S&P would be down about 0.75%. If the number was going to be 150 to 200, they were thinking up 1.25%. So we didn't. What was the number again that we got? We got 150. So that's kind of comes in. Yeah, I mean, right kind of in the middle of that. So that's probably why the market's not moving too much on it. I do see the revisions too. Sometimes it takes a few minutes for the revisions to come out. The previous month was revised down from 143 to 125 for non-farm payrolls, and private payrolls were revised down from 111 to 81,000. So that could also have a little bit of an impact there.
I think also, like, we talk about different market environments and what are the catalysts and what's moving the market. I mean, interest rates, right? It's not in the forefront. I mean, well, people are watching it. They want the Fed. I don't know if this is even going to move the Fed funds tool at all as far as the indicator goes. But it's tariffs, right? That's the concern of the market right now, and that's what moving the market. We did get some price action off this. Interestingly, I scheduled in just a few minutes. We're going to be bringing on our guest, a new guest today, Erin Keating from Cox Automotive, and she's going to talk about the impact of the tariffs on the auto industry. So we're going to be doing that in just a few minutes. As far as stocks movement off this, Christian, I think your key stock for today is Broadcom, right? That's when they came out with the good news. I think if I was a Broadcom shareholder and I was looking at this report, I'd be a little bit disappointed that it didn't get back up over, nowhere near the pre-market high. You always have those things. Nvidia, which you mentioned, that's getting, was a little sleepy. That's actually moving more than the Broadcom right now. That's up at 112.65. So,
Yeah, I
not
think
how.
you're.
Go
I
ahead.
think you're right. The Broadcom is going to be very interesting to watch today to see if the gains can hold. That 200 level that I mentioned, the stock is a little bit below there. So I think that 200 level is going to be very interesting to watch for today, and kind of could give you a little bit of a proxy for overall risk for the market for today.
Seems like there's bids out here on the dips. I mean, just trying to keep an eye on the corner of my eye. 2350 back up. I don't know, Christian. I don't quiz you much. You think that high of the day's in, or do you think the bulls can
For
mount a
futures,
rally? Yeah.
I don't know. Yeah, I mean, it's a tough one. I am seeing the VIX trail off a little bit, which is good. The dollar gains, the dollar initial reaction was higher, and that has also subsided. I see dollar futures now down half a percent. So I I don't know. I think now the stage moves to what Mr. Powell wants to say. So just give me 1 second. I'll be
Twelve
right.
thirty. Wow. Oh boy,
12
that's going to be fun.
Twelve thirty, and I just wanted to mention one more thing too. Fed fund futures. So Fed fund futures starting to kind of price out more cuts as you go further through the year. The next Fed meeting that we have is March 19th. Fed fund futures are not implying that we're not going to get a cut right now unless something materially changes here. There's about a 10% chance for the next Fed meeting on March 19th. There's only a 10% chance of a cut there. Once you start to get to the next meeting, which is going to be May 7th, there's a 47% chance of a cut there. So that's perked up a bit. Then once you start to get to June, now you're looking at a 77% chance that they're going to cut interest rates in June. So that's changed a bit. So I would keep that in mind with what you hear from Powell today.
Yeah, don't you think you'll say, well, inflation is coming down. It's it's not at our target yet. We do have some concerns that it might not reach our target, but we're data dependent. So there, you don't even have
Is
to.
that your official Powell voice?
Yeah, that's not a very good one. It's not a
That's
very
good.
good.
I like it.
Yeah,
But yes,
he's
I agree. I think he's going to say the things, all the things that we've been listening to. They're going to stay data dependent. I'll give you my Powell voice. We're going to stay data dependent. Did you see my purple tie today? Did you, inflation's going in the right, we think it's going in the right direction. So yeah, I agree. We could go around and around with that commentary, but
All
that's what
right.
he's been doing.
And as an ode to Triple D here, sell the rip is working here. We have now our 30 handles off the high of the session. I know based on your I know you have your 1.6% move. Based on the 9-day average trading range, up over 100, it's about 100 handles. If that 57.86.50 holds, we could be trading under 5,700 today. And if somehow this 57.35 holds, we'll be over 5,800. But we'll probably just chop people up at this 57.50, 56.70 area for the remainder of the day here. All right. We got a new guest coming on, and that is Erin Keating from Cox Automotive. All right, Erin Keating, Cox Automotive Executive Analyst, taking over for Michelle Krebs, who's been on the show for a while. Erin, how you doing today?
I'm well, thank you. How are you all?
Good. So, explain to us your role at Cox Automotive.
Yeah, so I was delighted to be able to fill the very big shoes of Michelle Krebs when she retired last March. So I'm the executive analyst. My role really is to oversee what's happening in the manufacturing space specifically, and then really help look at some of the data that our chief economist, who I report into, and all of our really amazing data analysts look at to help synthesize some of that information for the broader picture of automotive.
Okay, so let's go 6 months ago.
Yeah.
Before the election, what was, how was the auto industry then? I mean, we know the stocks, GM makes a ton of money. They don't get rewarded for it. Talk about it 6 months ago.
I mean, 6 months ago, we were seeing a lot of uncertainty leading up to the election, just because individuals were really feeling like there may not be a decisive victory one way or another. And that was leading to a lot of people sitting on the sidelines, waiting to see what they wanted to do. But we invariably saw a quick, what we called the Trump bump, once the election was finalized and really kicked into gear, so that customers felt like, okay, well, at least there's some certainty here. I would say that picture has now changed again. But 6 months ago, we were, it wasn't huge growth for the automotive industry, but we were slowly ticking up, getting back to what we called normalized levels since 2019, and feeling decent that things were going to keep moving once we could get past that consumer sentiment bubble of uncertainty.
Okay, so we're not here to to discuss whether tariffs are good or bad,
Sure.
short term or long term. We're just here, and the reason we brought you on today is, talk about some of the short term effects on the auto industry and eventually the longer term. And of course, we don't know how long the tariffs are going to be. Talk about tariffs, short term and long term.
Yeah, I mean, the thing that I'd like to emphasize the most, because a lot of people are really looking at this saying, immediately we're going to see prices rise. We won't see it immediately impact the market. One, that's because we have a lot of good inventory on the ground at dealerships. So we're relatively confident that consumers still have a good amount of choice at dealerships, and those vehicles have already been priced and are set for the market. What it's really causing is a lot of volatility and uncertainty for the automakers, and more importantly, for all of the small suppliers that really build up the supply chain for automakers, in their ability to make any kind of long-term plans. So it's like a short-term issue right now, but it absolutely impacts the long-term plans for any one of these automakers and or suppliers. And then, of course, downstream, the dealers and the consumers.
Okay, so we don't. I know there's been some reprieve of when these are actually going into effect, but what's the lag time between when they actually go into effect and then when consumers are really going to start feeling the pinch when they go to the dealership?
Gosh, that's a little bit difficult, so don't quote me on it, but I would assume we're going to not see some things really hit for a couple of months. I mean, granted, we know all the automakers and suppliers are deep in strategy rooms right now trying to plan A, B, C based on what might happen here. But truly, again, I just sort of harken back to the instability of it all. It's really difficult on a day-to-day swing in policy to make any kind of long-term decisions. And again, we have a healthy amount of inventory that's actually sitting on dealer lots right now. So I would say, and this is just shooting something in the dark.
Okay.
4 to 5 months, maybe we'll start to see adjustment. And that just depends on how much dealers and or automakers feel like they need to start front loading some of that cost to make sure that they cover themselves in the long run.
Is there any of the automakers that might be more insulated from the impact of the tariffs than the others?
I mean, theoretically, we know that Tesla is, they're probably the least exposure. They're not 100% clear of it because they do import from Mexico, but they have a way lower content challenge there. And we see that there are some brands that have a lot more exposure based on what their assembly is right now. Of course, the being in compliant with the USMCA helps you avoid about 85% of our product that's coming over the borders right now is covered by that. And so think of it, about 15% is going to really be impacted by that. But winners and losers are a little bit hard to pick just yet, because we also don't know how they're going to apply the tariffs. Largely everyone in the media right now is really focused on automaker level, and that's a little easier but harder to parse. But when we get down to the supplier level, that is just a world of complicating factors to determine which suppliers and how often are they going to get hit, and can the government, keep up with, assessing that border tax.
Over the years, I've had fun with Michelle, talking about Tesla and FSD, full self-drive, autonomous driving. Without that, when I'm not asking for any comments on Tesla or whatever, but her, along with me, were a little bit skeptical about what the rollout and what the what the deadlines were for this. You've seen some cutbacks from
Right.
some places as far as like the EVs are, but if you could put on your future goggles here and
Yeah.
FSD and things like that, are we closer than we think or farther than we think from it?
I think the interesting thing is technology is there. And I think this is across anything, whether we're thinking about being able to sell a vehicle completely online, autonomy, technology, autonomous technology in the vehicles of today, EV batteries. I mean, all of these things have been in play for decades, honestly. I was with Audi of America for 10 years. And back in 2017, I was riding in a vehicle that was pilotless, right? So the technology is there. I think the bigger thing that everyone needs to really consider is, one, how is it advancing similar to EV battery technology? And really the level of adoption, and more for autonomous. In my humble opinion, I believe you'd need near 100% adoption in the US, with infrastructure catching up with that, in order to quote unquote solve for stupid, right? Like if robots and humans driving together, you're still open to a lot of challenges with building that into the infrastructure in any given metro area. So we're seeing a lot of inroads with Waymo and other robo-taxi, quote unquote companies, if you think about it. But I still think that's going to be highly, regionalized to areas that are able to handle it within inner cities and things like that.
Just a quick question for you. Hey,
Yeah.
So in regards to the car market, is there more potential for the used car market to outperform? Looking at a couple names like Carvana, which was doing very well up until until the momentum really kind of cooled off in growth stocks. In the current environment, if we do see a little bit of a softness in the economy / recession, do stocks like Carvana or the used car market perform a little bit better here?
We know that used car market is where people turn to when they're economically pressured, or if they're really needing to find that affordable product. We still know that prices are rising in used car just as much, and we're going to have a lot of, depending on how production goes based on these tariff discussions, new cars still need to be able to offload the metal, if you will. So I think we're going to continue to see that convergence of OEMs coming to the table or automakers coming to the table with incentives. But sure, I think used cars, we're about to go into that dearth, or we're already in that dearth of, where we lost that production during the pandemic. And so, it's about 2.5 million vehicles a year that we lost. So the 0 to 3-year-old vehicles are still relatively light. We are going to see an uptick in used EVs hitting the market. So that will be an interesting thing to watch, is who's got a larger garage of used EVs, because if the tax for used EVs, tax credit used EVs stays in place, that could be a real lightning rod for demand, as we've seen so far for used EVs.
All right. She's Erin Keating. She's executive analyst over there at Cox Automotive. New guest here on PreMarket Prep. We very much enjoy your content, and we'll be dialing you up again real soon. Thanks, Erin.
Anytime. Yeah. Have a great day.
Thanks, Erin.
All right, let's shift away from the market. Just 1 second. We just came down. We did touch settlement. So trying to find a bid here at the close of 46. Haven't taken out that pre-market low yet, but Christian, we have another event today, I believe at 5:15, but not really taking much of the press.
Yeah. So possibly, I think where you're going with this is the possibility of some names being added to the S&P. We usually find out about that prior to the S&P. What do we have? Quadruple witching that's coming up. Just looking at the calendar. Today's the 7th. So sorry, it's been a long week. Quadruple witching will be on the 21st. So you'll hear about things like other S&P announcements, like they officially announced things on the 14th. In terms of like the total like S&P rebalancing, but we typically find out about whether or not they're going to be adding or deleting like those one-off names after the close on the Friday, 2 weeks before quadruple witching, or the S&P rebalancing that they're going to be doing. So we've got a couple candidates that could be added, and I think they're pretty interesting. You got Robinhood up there. Robinhood, I was doing a lot of trading in until it kind of completely, the momentum came tumbling down in this. But I think this is going to be an interesting one to watch. I might do a little bit of positioning in it. You can check out the implied move too for Robinhood, probably for next week if you're looking to play this via options, and give a shot to this. It's a decent move. Let's see, and again, that kind of goes with everything else with the market too. Option prices are very the implied move is higher because of the overall level in the VIX. Right now, you're looking at, if you want to play this for next week's options, they're implying about 11% move for Robinhood. So that's going to be tough. Maybe with a call spread might be a little bit better to play that, but that's one of the names on the possible list of going in.
Okay. All right. Are we back? Are we back to no chart here again? That's what Howard Chambers said.
Huh.
All right, boy, oh boy, oh boy. How about nope? How about that? I don't know how I lost my chart there. Still no chart? There you go. Thanks, Carmen. You're always lending a helping hand here. I don't know. I mean, is this like the kind of environment where, if you get added and you get a pop, people are just gonna be selling into it? Or, does anybody really care?
Yeah, that's going to be a good question. And like, I think that, if you play it with options, with that type of implied move, 11% move, that's like an options move. That's like an earnings move that they're looking for Robinhood. So, you could try to play it with stock too, and then you could sell it on the initial bounce if it does get added.
Okay. And what are some of the other candidates? App Lovin'. Went to a sell. Someone downgraded to a sell. Heard App Lovin' is a potential candidate. What about Hood? Hood?
Yeah,
Coinbase.
But look at the move, and I think just before we go to Coinbase, look at the move that has happened in AppLovin. Some of these moves, and also remember these things are going to get announced after the close. So be careful about, like, if you're going to play the game of trying to anticipate or trying to guess if one of these names are going to be added. Be careful, because the move that these things are happening intraday, if you pre-position in this stuff, early, and the market sells off, you might already be, feeling some market pain, because this stock yesterday was another big move to the downside. It just blows my mind, some of the moves that we've seen over the last couple of weeks. I think there's a note out by Zero Hedge saying that this is one of the biggest momentum unwinds that has ever happened right now in this market. This stock went from was around 520. This is like literally 2 weeks ago, down to 260. So it has been cut in half in a matter of a couple weeks. So, I know that there were some questions we're going to bring up. We're going to maybe talk about Palantir too. There was a couple questions if we have ticker time to go, but you really have to just pay attention to what's happening in this market. I don't know if you want to, if you're sticking your neck out right now, I mean, you have to understand that the volatility is just huge. AppLovin went down just yesterday. I think the percentage move was, could find this, just was 18%. So, it's really tough to say, hey, I'm going to jump into names right now with an 18% move in the stock. So I would wait till closer to the close. If you are looking to play these things for the possible inclusion. But I'm just astounded at some of these names, and like a lot of the momentum names, and even like we talked about Netflix too, which to me is not really like in that bucket of like high momentum. But I think you really have to be protecting your downside at this point. And I don't know if we're there yet. I think that we're getting closer, as I mentioned, with seeing names like Netflix go down yesterday. But I think that this is a very tough market to deal with right now.
This was this boy. Someone really traded some volume in this yesterday. That was the biggest volume day since November 7th. And on that day, November 7th, it went from 168 to 246. The volume went from 6 million to 18.6 million. And then it just continued on its merry way higher. And then you have the big volume day yesterday, traded almost a similar scenario. You traded 8 million yesterday, or 2 days ago. You traded 16.2 million yesterday. So maybe everyone wants out of the pools, out of the pool. That was a big volume day. Of course, you just have to wait for a little bit of consolidation, or at least for it to stop going down. Talking about not stopping going down here, folks. Our worst fears. We are now turning into the red. We are now 45 handles off the pre-market high. Sell the rip strategy once
Take a look
again.
at. Yep, so you're absolutely right, and you did say earlier that you thought the high might be in for the day. Take a look at what TLT is doing as well. You got a flight to safety here as bonds are starting to catch a bid here. I like this. I don't know if I'll try one more. Should I try one more time to share my charts or no?
Oh boy, oh boy, oh boy.
We got just a couple minutes to go, so I mean, I don't know, but I like this little pullback that you're seeing in TLT and IEF. If you feel like you missed the rally in bonds, over the last couple days, there's been a little bit of a pullback from the highs. So
Mhm.
I actually went long some in my longer term portfolio. I went long some IEF, which is the 7 to 10 year Treasury bond ETF. I think that you might continue to see a bond rally here. And I took advantage of the dip that you've seen this week, and I got involved in IEF.
Good. Okay. Just a couple minutes here. Ticker time here. As the S&P is losing momentum here. I don't know, did we miss any tickers here? But we're going to do 2 or 3 tickers here before we wrap it up on this Friday here. So first one in, I see Kevin Costello saying China, China, China. Okay, so we'll go real quick. FXI been strong. Is this up again today? Up another 10 cents. Boom, boom. 37.49. Use that as a target on the upside. Christian, I'll let you take this one. WU. Is that Western Union? Holy mackerel. Is that still around? Western
Send,
Union?
send the
Any thought?
money, right? Isn't that the slogan for Western
Yeah.
Union or something like that?
It's been in a trading range between 10 and 11. See if you can get it established 11 bid. Let's talk about IWM here. Oh, we are getting walloped here, Christian. Another leg lower. Did we get some news here? Was there some additional news out, or is this the market being just what it is?
I think it's just the market being what it is, and as I mentioned, bonds are continuing to move here. You got a real nice move right now. I see 30-year bond futures up 0.6 of a percentage point. So, out of stocks and into bonds.
Yeah, that seems to be the mantra. Okay, one more before we wrap it up here on this Friday. IWM holding up here, trading down 13 cents. Look, I'd keep an eye on this 205 area. You poked under 205 the last couple days. That was also an area of a one-time bottom in September and a few lows in August. So keeping an eye in 205. You have a number for me in the IWM.
Yeah, I think. I mean, again, this is just downtrending, and it's trying to hold this 205 level. I do see that as a pivotal area. I see on my charts, there's what's known as a virgin point of control that was kind of hanging around there. If that doesn't hold, then I think the next move down is probably down to like 194. But I'm really watching the 205 level in IWM.
Okay. All right. We're going to wrap things up here, Christian. Thanks a lot. I know it's a busy Friday for you here. In the markets, we're coming in with just yesterday's low, 57.20. We just almost got there and went to 57.29. You'll be looking at the your closes as resistance. From now. Monday, we'll go market structure Monday with Tim Quast. Tim has been cautious on the markets the last couple of times, and we'll see what he's seeing on market structure Monday, folks.
Have,
Thanks a lot for joining us, Christian. Go get them, and you guys know where to find us Monday morning at 8 a.m.
guys, have a great day, and don't be a hero today on a Friday. Take it easy.
Don't be a hero when it's going to zero.